Today, let's explore SoFi, analyzing its recent market movements, reviewing key data, and examining broader market factors influencing its performance. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi stock experienced a modest decline of 1.34%. While this might sound concerning, it wasn't particularly alarming compared to the harsher hits many other growth stocks faced recently. SoFi's trading range for the day fluctuated between $15.25 at its lowest and $15.80 at its highest, all within relatively low trading volumes. With about 38.09 million shares exchanged, well below its average of 58.7 million, it's evident that subdued activity wasn't unique to SoFi, but part of a larger market trend. Interestingly, there wasn't any specific news tied to SoFi to explain this drop. No fresh updates, SEC filings, or company announcements came out to sway investors. Instead, the market seemed preoccupied with digesting broader economic news. Key elements included discussions around tariffs and the Federal Open Market Committee FOMC minutes. The FOMC minutes offered some optimism, noting inflation was gradually approaching the target rate of 2%, with potential rate cuts expected to happen at a steady pace. This gradual approach sparked mixed reactions among investors. Despite these measured plans, speculation grew about the timing of the next rate cut. Initially, there was a 52.3% likelihood of a rate cut in the December 18th meeting, but this spiked to 63.2% shortly after. It's a humorous observation that the market often reacts like a child impatient for a promise to be fulfilled immediately. Looking beyond interest rates, it's notable that short sellers returned a substantial 4.61 million shares early in the day, which likely contributed to a brief upward movement in SoFi's price. The reasons for this action remain speculative, perhaps a decision to close out positions or a calculated move to reduce risk. Despite this activity, short interest remains significant, with 13.51% of SoFi's float, amounting to roughly 143.9 million shares, being shorted. This represents a staggering $2.33 billion invested in short positions. Another noteworthy point is the cost-to-borrow rate, which had been negative for several days, but has now normalized. This indicates that brokers are no longer offering incentives for shorting SoFi stock, reflecting a shift in market sentiment. On the options front, approximately 22 million call options and 5.66 million put options were traded. Of these, 41% lean bearish, reflecting a cautious outlook among some investors. While the total dollar value of options trading saw a decline to $27 million, bearish sentiment remains evident, as reflected in a put-to-call ratio of 0.42. This shift suggests that while there is still optimism for SoFi, some investors are hedging against potential downturns. Examining recent trading activity reveals some changes in sentiment. A consensus has emerged for SoFi stock to hover around the $17 mark in the near term, a slight downgrade from earlier expectations of $18 or higher. This adjustment aligns with broader market behaviors, where overbought stocks often experience pullbacks as investors look to lock in profits. Over the past month, SoFi has surged 39.42%, an impressive rally that naturally invites some consolidation. Some bearish investors are even targeting prices below $14, indicating a growing divergence in market expectations. However, technical indicators suggest that SoFi has solid support at $15. It is unlikely to dip below this level in the immediate future, especially with upcoming economic reports like PCE and GDP set to influence the broader market. For those unfamiliar with options trading, this period of consolidation can present strategic opportunities. Personally, I opted to sell $15 put options. This means if SoFi stock falls below $15 by the end of the week, I'll purchase shares at that price. If it doesn't, I'll keep the premium. Option strategies like this can be profitable when researched and applied effectively. From a technical perspective, SoFi's performance remains above key moving averages, including the 50, 100, and 200-day averages. The stock closed above its ALMA, Arnaud-Lagu moving average of 15.33 cents, signaling resilience despite broader market volatility. Other indicators, such as the MACD and stochastic RSI, suggest bullish momentum, although some consolidation is evident. Looking at SoFi's one-month chart, there are signs of slowing momentum, particularly as investors adjust their expectations. However, analyst sentiment remains largely optimistic. A recent rating by Jefferies assigned a $19 price target, reflecting confidence in SoFi's operational performance and market position. This came as a surprise, popping up unexpectedly, but further underscores the long-term potential many analysts see in SoFi. As we wrap up, it's clear that SoFi's current phase is one of balancing optimism with market realities. While recent pullbacks might concern some investors, they also present opportunities for those with a long-term outlook. Whether through option strategies or simply holding shares, SoFi's underlying fundamentals and broader market position suggest room for growth. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.